Hello, this is Japanese Economic Review Channel. Today, we explore the Japanese consumer mindset based on the Cabinet Office's Consumer Confidence Survey for June 2026. We will highlight the delicate balance between stabilizing livelihoods and looming inflation concerns. Let's start with the big picture. The Consumer Confidence Index stabilized at 33.8, up 0.2 points from May. This modest recovery is driven by a 0.8-point improvement in overall livelihood. However, a dark shadow remains. 93.3% of consumers expect prices to rise, severely dampening spending willingness. To ensure reliability, this government survey targets 8,400 households across Japan. In June, we received 6,610 valid responses, a strong 78.7% response rate. Our primary lens today focuses on the 4,267 responses from 2 or more person households, providing a robust baseline for our analysis. The June index stands at 33.8, showing slight growth after a dip in April. This forward-looking metric averages 4 components: overall livelihood, income growth, employment, and willingness to buy durable goods. While a score below 50 indicates pessimism, the upward trend suggests a gradual recovery. Breaking down the index, overall livelihood rose to 32.0, acting as the main driver. Income growth remained flat at 40.3. Employment slightly ticked up to 38.4. However, willingness to buy durable goods severely lags at 24.6, reflecting deep consumer hesitation to spend. Zooming into the personal economy, the plus 0.8-point recovery in overall livelihood was driven by a shift from worse to unchanged. Meanwhile, income expectations face stagnation. Nearly 60% of households foresee zero change in their income trajectory, creating anxiety when coupled with rising costs. Looking at the broader economy, job market fears are relatively muted, with over 50% expecting no change. Yet, the friction point lies in spending. A staggering 78.4% of households believe it is a bad time to buy major durable goods. This disconnect highlights a highly defensive consumer stance. Although not part of the main index, asset value reveals an interesting outlier. Scoring a high of 44.8, it shows that households exposed to equities and real estate remain significantly more optimistic about their wealth compared to general consumer sentiment, despite a slight 0.6-point drop from May. This chart maps the macro trajectory over recent years. Following relative stability, we witnessed a severe drop across all metrics in spring 2026, bottoming out in April. Today, we are observing a nascent, synchronized stabilization, though confidence remains below historical comfort levels. The driving force behind consumer hesitation is the inflation consensus. A near-unanimous 93.3% of households believe prices will go up over the next 12 months. Only 2.2% expect prices to fall, indicating deeply entrenched inflation fears across all demographics. It is not just that prices will rise, but by how much. More than half, 54.0%, expect severe inflation of 5% or more. This acts as a durable goods freeze, actively delaying major purchases. Consumers are bracing for impact, choosing to save rather than spend to prepare for higher daily costs. For context, the index is built on a 5-point survey. Responses range from better weighted at 1.0 to worse weighted at 0. These weights are multiplied by response percentages to calculate individual components, ensuring our index accurately reflects nuanced shifts in sentiment. In conclusion, the Japanese consumer has a stabilizing baseline but remains paralyzed by pricing fears. While livelihood and employment feel relatively secure, the inflation trap has frozen capital expenditures. Until severe inflation expectations cool, broader macroeconomic optimism will remain anchored. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.